wherein we have a stellar lineup of speakers who are all set to invest in some interesting startups, and you can all ask whatever your queries are with regards to your pitches or the consumer space at large. So before we get into the conversation mode, I'll give 60 seconds to each one of you to just briefly tell us about your investments in the consumer space.
Sure. Hey, hi everyone. This is Adithya, and I represent Anicut Capital. We are a multi-asset class manager investing across debt and equity strategies. From the growth equity strategy, we have done a bunch of consumer brands like Blue Tokai, which is a cafe chain, Neiman's Shoes, Earth Rhythm, which is a beauty and personal care company, XYXX, and the Ayurveda experience. So bunch of companies from the growth equity side, and from the debt side, we've also done companies like Sugar, Milky Mist, Wow Momos, and so on. So that's a bit of portfolio.
Good afternoon, everyone. This is Amit Singhal from Fluid Venture. We are early stage fund which invest only in direct to consumer brands. So till now we have invested in 10 companies, starting from Master Chow, Coparo Cleans, Bummer. These are few portfolio company which you must have seen on the television. So we come at seed stage or pre-series A. Our typical check size is somewhere between 2.5 crore rupees to 3 crore rupees at the seed stage. Then we do another follow on between 1 to 2 crore rupees in the same companies.
Hi, I'm Harman. I'm the founding partner of Prath Ventures. Prath is an early stage investing firm. We are completely focused on India consumer, and we are a seed to series A investor. We started investing about 12 months back. Have made 3 investments so far. Jimmy's Cocktail, Okera, which is a lab-grown diamond jewelry company, and Assembly Luggage. These are the 3 we've done, and we're looking to do more.
Hi everyone, I'm Shreya Bhatnagar. I'm a principal associate at Anthill Ventures. We're an early stage investing and scaling platform. We usually come in at a Series A, go up to Series B, C. Invest a 500K check and follow on with a 1 million. Our thesis is spread across urban lifestyle and urban tech. Urban lifestyle has a lot of our D2C products, which kind of span across, like beauty, F&B, healthcare, all of that. And of course, on the urban tech side, anything that integrates the tech into the consumer segment. For us, that's targeted at Gen Z, so that's been our focus for this year. And whoever's building in that space is most welcome to come and chat with me after this. Thanks.
Good afternoon, everyone. This is Divya, Anand here. I'm a director with Stripe Ventures. We are a venture debt player. So we've backed over 40 consumer-focused companies, say the likes of Mensa, Bluestone, Cure Foods, or the very recent ones such as Foxtail Shreya. So we typically come in once a company has at least raised a pre-series A round, and that's when we typically come in. So the way we sort of position is a venture debt as a product is non-dilutive vis-a-vis equity. So we complement equity, and that's how we've sort of enabled financing for a whole bunch of companies right through their life cycle. Yeah.
Thank you. I think these are some interesting investments you have already made. So tell us what makes an investment pitch click for you when a D2C startup comes to you for investment. Go ahead, Divya.
Sure. In terms of course, we've looked at within the consumer sector itself, we have looked at companies across different sub-sectors, if I may call, BPC, food. So there are multiple sectors. So let's just take the example of BPC. Of course, a lot of us do think that it's fairly, at this point in time, maybe overcrowded. Nonetheless, of course, we have backed fairly interesting companies such as Sugar Cosmetics. We were among the first investor there as well. I think when we do start fairly early on and cut the first check, the first thing that we would clearly see is what is the product differentiation vis-a-vis the other folks. And that's something we can definitely figure out given there is a lot of customer feedback that is there basis social media in terms of how it's a data-led purchase. So is there a strong customer feedback loop that's fed in? And if the company has able to build a strong product, which is different vis-a-vis the other folks, and also if there's a strong assortment and there's not dependency on one. So that's one thing we would definitely see, especially in a crowded space in the BPC segment. So that is, of course, the first point. And also in terms of their marketing positioning vis-a-vis the other folks. I think those would be two key factors to start off. And of course, the other aspects such as the founder pedigree in terms of their ability to demonstrate what is it that, how well they can scale the business and the financials and the customer retention cohorts. All of those are critical. But to start off, I would say it's the product differentiation.
Divya?
I think for us, a few things that usually stand out is the vision of the founder. I think it's important for a D2C founder to have a very clear growth vision, sorry, a clear vision on the TAM and on the scalability of the product in itself. So once that kind of comes through in the initial stages, then we look at the customer acquisition strategy and retention strategy along with the scalability plans. I think these couple of things, apart from product market fit and product differentiation, are really something that we constantly look out for in a product. In fact, we have a couple of interesting brands like Bold Care, where initially when they started out their journey, they were pretty populated in the market. There were a lot of other players, and then when they came to us, we kind of helped them refine their product, get the right branding strategy, and that's what made them kind of stand out now as well. So that's a few things that we look for.
Harmanpreet?
Yeah, I think very similar thoughts. I think the way we look at it is we have this framework called, or I think it's a truism, called fastest, first, cheapest, or best, right? These are, this is where we think the opportunities for a new brand comes up. So either you are first to the market, or you're fastest to the market, you're ahead of competition, or you are essentially doing something very differentiated, which means you're best in that category, right? So we look at leadership. I think cheapest is difficult because when you're building for the affluent India, which seems to be the theme today, it is very difficult to be cheap as compared to an incumbent because they have scale advantages, right? So for us, it is mostly either you are the best in that category or wanting to be the best in the category, or you're the first in that category. Then it comes to founders, and maybe I can talk about that later, but essentially marrying the skill set of the founder to the opportunity as well. So
So Punita, being a chartered accountant, numbers are extremely important for me. But to be very honest, when I evaluate the startup for the funding perspective, that comes a little later. So for us, it is very important to see the brand positioning in the market, how the consumer will perceive this brand. Whenever I received any pitch deck, first of all, I think, if I am a customer, how I will see the brand. What are the differential factor as comparison? What are the edge available? Whether they can be faster, with their competitor or not. So these are the important factor for me to decide whether I want to go for the phase 2 or not. Then definitely in phase 2, gross margins are very important for D2C brand. Unless and until you have a good gross margin, you will not work. CAC is a common problem for all the D2C brand. In case someone has cracked that, that's important factor for me to see how they have cracked that, whether they are good in the market. One important thing is that whenever we evaluate, we see that who is the chief marketing officer in that particular brand, because we don't invest in enablers. We don't invest in technology company who are enabling the brand. We are directly investing in those companies who are brand, who are manufacturer, or who are the owner of that particular brand. So for us, it is very important that how the founder is thinking about the marketing strategy, what are the advantages they have for the marketing. So these are some phases under which we evaluate any startup.
So I think every panelist sort of covered, and we look for three things. So one is what we call as perceptible product difference. So which means either there is a design element that's different, or there is a composition formulation, that's very different, and that's perceptible by the consumer. That's one. The second thing is that there is organic growth, right? So which means that demand generation happens at a consumer level rather than spending a lot more marketing dollars on pushing the product. And thirdly, we call it bargaining power, which means the brand has the ability to either price it better or has the ability to get a better cost of manufacturing, or has the ability to better distribute, by which they basically get negative working capital because of their distribution chains want the product and so on. So these are three large themes that we sort of look at when we look at a brand.
Sure. And these days, we are seeing a dearth of so many brands overflowing in the market. There's so much saturation. And typically, if I could just point out in terms of the beauty space, there's so many D2C startups that we see all around. So, I mean, when such kind of brands reach out to you, I'm sure you must be getting thousands of such emails every day. So, I mean, any piece of advice you want to give to such startups in terms of, I mean, how they can make a difference actually being in this space?
Sure. So I think when a brand tries and solves for a market issue, I think there are two important legs to this. Right. One is there is a consumption gap, and which means there is a need in the market which maybe a current product does not solve, or there is a price gap, which means there are current products but they don't solve it at a given price. Right. It can be either an aspirational product or it can be maybe a cheaper product. Right. So there are two aspects to this. So we believe that any consumer brand that is getting launched has to solve for one of this at least, right? Solving for both is great, but one of this is particularly important because that will sort of lead to the organic growth point that I mentioned earlier. So yeah.
So I will echo with my co-panelist. In fact, if we will see when D2C emerged in India, there were lots of FMCG brand. Let's take the same example of beauty products. There were lots of big giants who have a beauty products, but still there are many companies in that same space who are doing better. In case you are entering into the same space where there are lots of players already in the market, you will have to be very clear about the market positioning and about your product. Your product is the key ultimately. Sometimes what mistake we do, we start doing so many things together. Like I have seen multiple deck where they say, okay, we will start with 50 SKUs or the 50 different product on the very first day itself once you will give the funding. So I keep explaining them, it is not like that you create a volume by the different SKUs. It is always better to have 5-6 SKUs at the beginning, learn from them, create a market position with that product. Once the brand will be established, there is always time to add more SKUs. So be sharp man about the positioning. And I still believe that with a 140 crore population in India, still there is lots of opportunity for all the startups in the same category where there are lots of players there. We talk about beauty product, can't there be another Lenskart in India? Why not? If some different positioning will be there. Can't there be any other Mamaearth? Why not? There can be. But you should be very clear what is the product. It should not be Me Too product where you will say, okay, someone has done something in this particular category. That's why I am creating that. That should not be the objective. You should identify the right problem which consumer is facing and you should find the right solution and create the product around that. So there is enough market still available in India. That's what is my.
No, I echo your thoughts, Amit. I think it has to start with the consumer. So I was reading, just a 1-minute anecdote, I was reading a book about the history of P&G. And the first product, the first soap that they launched was a general purpose soap, right? It was, you could use it for laundry, you could use it for body, you could use it for your kids bathing as well, right? So it was that unsophisticated and unsegmented market at that point of time. I think my belief is consumer needs keep evolving, right? And brands need to figure out what is the new need which is unmet. So, change is something which creates new needs, I feel. Be it a generational change which is happening, like Gen Z needs are different than perhaps, the needs of people like me or my parents, right? So those are unmet needs. The needs for affluent India are unmet as compared to, the mass market. So I think it's a constant evolution. It has to start with consumer first and just figure out what the gap is.
Yeah, that's so true. Actually, you talk about, scaling with the consumer. So we actually have this scalability question because we are focused a lot on that aspect with all of our founders, right? And we always advise them that, test the product out on first your 100 customers, then make it efficient, make it scalable, then move on to a 500 and keep it phased and in a piecemeal manner, and testing on the customer is so important because nowadays the flavor is changing and also the volume of consumers is changing. And that's why as the product manager, you should make sure that your product is focused on just one target segment, which you can scale up in a phased manner.
So what I think is, luckily, of course, to start off with, the TAM, as we see, is fairly large. So as a starting point, that's of course an exciting piece. As Adithya did mention, so there are two things that you're clearly solving for: the product being unique, or if there is a gap with respect to the pricing, right? And so the TAM is large. What is it that you're offering which is unique vis-a-vis the other folks? Just probably just sticking to the BPC space itself. Today there are, while of course there's a Mamaearth, and prior to that there were larger brands as well. A lot of them in our portfolio have, in a very short span of 1 to 2 years, have actually scaled to an ARR of about 100 odd crores. And of course, they have sort of focused on probably evidence-based products, focusing on customizing basis what the customer requires. So that's personalization. I mean, that seems to be the buzzword these days, right? So a lot of them are finding what is their niche and what is it that they can offer, which is going to be unique vis-a-vis the other folks. And of course, as Amit also did mention, right? I mean, another exciting piece with respect to the D2C category is the gross margins being inherently very high. And how do we get this better? Largely getting your supply chain right, your vendors, etc., quite early on. So all of these factors put together, you sort of do ensure that you can scale from where you are to probably reaching 100 ARR is fairly easy, and post that, of course, the journey is tougher, but then that can definitely be achieved.
Sure. And since we are discussing innovative pitches, I want to hear from each one of you any interesting pitch you have heard in the recent time and you want to share that with our audience. Who wants to go first?
I can go. So recently, I mean, we were looking at a women's hygiene brand, and their largest category is, of course, sanitary pads. And it was just me and my colleague, both males, and we were like, we've done our market research, but never been, kind of exposed to the product and so on. So what the founder did was essentially, and his team, they brought up like 5-6 brands of different sanitary pads, and they opened it up for us. And then they, kind of tested it out, poured liquid, showed us how, what's the wetness level, what's the absorption level. So that was very interesting for me because, normally first of all, you don't get to kind of compare products like this. Normally pitches are very focused on the own product, right? And founders tend to stay away from talking about competition. But I thought it was very interesting way, and it really brought the point home of the product difference. So it was very interesting for me.
Interesting. You have something to share?
So we essentially, host a couple of these family office events every year, and then we bring in a whole bunch of our portfolio founders to, it's a 3-day thing where there are global family offices in Hyderabad usually. So this year we had a couple of founders fly in from world over, and we kind of created a meal around our F&B brands, and then we created an entire segment where all of our medical health segment was really broadly displayed. And under that, just the kind of innovation that we see on a daily basis, like medical health and integration of AI and tech into that. Some of the things we're seeing, like a software that can be installed in your TV, which can then monitor your breathing and movement. And it's just like uploadable through an API, and like just the demonstration of it all, and AI integrating and interpreting emotion. So these are some really cool products, and the founders around them are also really forward thinking, and we're excited a lot about all of that, specifically in our portfolio.
Okay, sure.
Probably I just got reminded basis what Harmanpreet had just mentioned. So I think probably this is one of the earliest consumer-focused companies that I had looked at, and that was also in the feminine hygiene space. And of course, the experience was very similar to what you had actually mentioned. Not a lot of us would really think a startup can create a dent in this, because you have the State Freeze and the Whispers backed by the J&Js of the world, right? But today we have multiple brands who are startups, Indian startups, who are creating a niche for themselves, and that's clearly backed by research, right? Today, a lot of the startups, their products in this space are way more of higher quality than what the legacy players currently offer, right? So there is an opportunity for each one of us to come up with the right set of product. So that was one example. I mean, I sort of echo. I mean, I got reminded that this is one of the earliest consumer companies that I've looked at. And probably another, I think, Country Delight was another company that was one of my first that I'd seen as well. Again, you wouldn't really think of creating a dent in the space because there are your players already in each of the states. But today there are so many such startups that have come and they are making a mark purely on account of their promise of high quality, right? So there are so many players who are doing fairly well. I did see Akshaya Kalpa outside as well. So yeah, I think product, if you get that right, I think, and of course the other things would fall in place.
So, Amit?
So I don't have particular example of startup, but I would like to share some tips here whenever you are pitching to an investor. Keep a balance between the product, team and finance. Sometimes what we do, I have heard many pitches where the organizer have given 10-15 minutes to the startup and they keep talking about the product because they are so passionate about the product, they don't talk about other things. So whenever you have time or you get some investors to pitch, make sure you spend X time on the product, then who are the team behind that, and then the finance is the important factor. Sometimes what happens whenever we reach at the finance stage, then they say, okay, I don't know this, my chartered accountant or someone else has worked on the pricing policy, I am not aware about that. So you should be very sharpen about the number, how you have fixed the price, what will be the gross margin, what will be the CM1, CM2, whatever is the number, repeat rate, etc. You should be very clear about that. So I would like to link this example with one of my portfolio company, Coparo Clean, where Simran came to us and we were in dilemma whether we will invest in this company or not, because that was a single founder company. It is not like that we are not investing. Bummer again is a single founder company, but we were deliberating that what can be the pros and cons of that. Once she start explaining the number and the business plan, all the partners had decided that yes, we don't have to miss this opportunity. We will have to invest in that. So that's how in D2C particularly numbers are extremely important. So you should be in control of that. But please make sure that you cover all the 3 points whenever you are pitching to someone.
Sure. Aditya?
Yeah, so maybe not innovative, but just from the founder's hope and ambition perspective, right? So we saw this brand recently who had already clocked about 70, 80 crores and above, and he was actually taking on Coke, right? And he had a very clear way to explain why he will build a 500, 600 crore brand in India, despite having the likes of Coke and Campa Cola and all of them. And just thinking of it, while all of that was particularly valid, what sort of struck me was the fact that India and market like India, you can always carve these niches and you can be experimentative and innovative at a microcosm level, which can still result in very large results.
Sure. And any instance, any of you wants to share wherein a startup a startup founder would have come to you and you thought, okay, yes, this is not the right time, or maybe they should come later on, and maybe somebody else has invested instead of you. Do you remember any such pitch? You want to share that with our audience?
I mean, depends upon how long we have, because always happens, and I think in investing, it's a matter of building conviction, right? So sometimes you might not see the right pattern, or you might not just have the right data points that sort of convinces you, and that can always result in someone else making the pattern match for themselves, and they'll go ahead. So it always happens. Quite a lot of examples, like I said, but I wouldn't want to name anything on the stage, but yeah, there are a lot. Yeah.
But without naming, you can share any anecdote.
Yeah. So in my earlier past funds, very, very well known large dairy brand. I had seen and met with the founder ever since, probably I think 1 year into their, or maybe 2 years into their incorporation or something like that, very, very young. And every time it was just a matter of timing, right? Either they were a little early or a little late, or that the fact that he was not maybe ready for a certain kind of DD, or site visits and so on and so forth. So this kept happening, but today it's a very large successful dairy brand, and I still continue to be very good friends with the founder. So yeah. So,
Yeah.
So Punita, in last 30 months, because our fund is 2.5 years old, so definitely we have evaluated more than 1,000 startups and we invested in 10 startups. So definitely out of those 90, many have done very good. But if I have to mention one particular name, that is the Open Money. 7, 8 years ago, I committed them before they incorporate the company. We sat here in Bangalore itself at Indiranagar. I said, okay, we will invest. Then there was a time between the company incorporation, and after company incorporation on a particular clauses in the shareholder agreement, we didn't agree. And then I decided not to invest in that. At that time, I was investing like an angel investor. We were pool of angel investor. And then they start raising every quarter. So every quarter, whenever there is a news that Open Money is raising, I was thinking, I was the first investor, and the valuation was very nominal at that time when I committed. So still we are a good friend, but we keep talking about those days that when we were evaluating even at the idea stage. So that is with every fund, to be very honest. And we don't think ki what happened. We always believe that whatever is the portfolio available with us, let's focus on that.
No, absolutely. I think when you've been investing for a long time, I think there's a longer list of anti-portfolio that you have than your portfolio, right? So again, don't want to name names, but one of the big decacons in India, me and my boss were supposed to travel and meet when they were like $10 million valuation, and we said it's too early for us, so let's not go. So that's always one that comes to top of mind. But I think the way investors kind of justify it to themselves, right? Essentially, we are going to invest in 10, 15 companies in a fund, right? The portfolio will be 15 or 20 or 30 maximum, right? So you are willingly going to pass on the hundreds that you meet. So it is just kind of justifying to yourself that I need to do 15 good deals and not every good deal in the market.
Anything you want to share?
Hello. We've invested in about 81 companies. This is our 7th year. So, of course, those stories go on and on. I think a few trends that we're happy we didn't get into are like the NFT space and, just all of that unregulated area, which is just quick money. So I think we're glad that we didn't get too deep in there, even though we're very culture focused and very Gen Z focused. I think, and the bad stories just keep coming in. There are a lot of missed opportunities for sure.
I mean, there are a couple of missed opportunities, but given we are venture debt and not VC, I think we've probably backed a lot of consumer companies across sectors and built a deeper understanding. Of course, some fare much better than the other, but given we are VD, I think we get to do a lot more. Yeah, there's a lot more opportunity for us.
Sure. So guys, if one door closes, there are many more open, so keep knocking. So before I open the floor for questions, just one last question I want to ask each one of you. Any emerging segments or trends you foresee in the D2C space coming up?
So I think one interesting theme that we are thinking is that, is in the juncture of this China plus one that's happening and India becoming, the manufacturing, at least, the starting stages of green shoots of manufacturing happening, which sort of opens up an ability to build brands globally, right? So which means that there can be a lot of India out brands that can be built. It can be in different categories. Of course, needless to say that, this has to fit in with what can be exported of India, which means that, for instance, your logistics and shipping has to be commensurate. You should have really high gross margins, so on and so forth. But I think that's one theme that is, that we are seeing is increasingly picking up. India's always exported food and culture globally. So maybe there'll be much more brands to come there. Yeah.
For us, the thesis is very simple. We always think from the Bharat perspective that what are the aspiring products for the Bharat and how that is emerging. So we keep an eye on tier 2, tier 3 cities to see what they want and what is not available there. So whenever there are startups who are bridging that gap between tier 2 and the brand proposition, we always believe in that. So our thesis is very simple. We focus on Bharat, the product for Bharat.
Absolutely the opposite, actually. So we think the fortune is at the top of pyramid, right? I mean, just on statistics, top 10% of India owns about 70% of wealth. And they are the only consuming class, actually, if you ask me, right? So we think that cohort is actually becoming more affluent. It's becoming larger. So products for more affluent India, more premiumization. We think next 10 years, that's a big theme for us. Second, I mentioned the Gen Z, right? I mean, they consume very differently. They think very differently about consumption. They're not worried about roti, kapda, makan. They're worried more about, what they can get out of life in terms of experiences. So we think Gen Z consumer is going to come into his own or its own in the next 10 years. And third, I think the theme for us is flux in channels. I think e-commerce was a disruptor 10 years back. Quick commerce is a disruptor now, right? And even modern trade continues to grow. So we think there's a lot of flux happening on distribution side. So that creates opportunities for brands that can cater their offering for that particular channel. So these are the three big themes for us.
Sure.
Yeah, I mean, this is the decade for D2C, so we're seeing a lot of products come in. I think the next couple of years, we're keeping an eye out for customer testing and keeping an eye out for trends. We were able to predict that pet care would be big about 5 years ago, and we've kind of been tracking that. So we see some emerging trends, in health tech, in longevity, in just self-care, which we're really excited about. And we're integrating that with tech and with architecture and with education. So it's just, it's getting good, yeah.
Yeah, so again, within the consumer space, for instance, even we have looked at companies, aside from the pure D2C ones, say in the health tech space, we looked at a couple of mental health. That seems like an interesting piece there. We've looked at a lot of these consumer-focused lending companies, again, fairly D2C focused in that sense. So a whole bunch of companies across different sub-sectors. So given we've, in terms, while we are very active and look at a whole bunch, so for us, if we were to pick one from that sector, we would see what is their offering, how are their operating metrics vis-a-vis the other players in that particular segment, how are their financial performance. So all of these factors would play a role, but in terms of themes that have sort of worked, at least over the last 1 year, ones that have sort of maybe focused on premiumization, probably in that sense I would sort of more agree with what Harmanpreet said, and probably customization. So these was, I think, across different subsectors that I did mention, I think these two themes sort of stood out.
Sure. So on such an insightful note, we'll open the floor for questions. I think we have time for two questions. Okay, let's keep it quick.
Thank you. Wonderful to hear all of you. One question. See, when a company approaches all of you all, and you like the company, you don't like the company, most often investors who do not like the upfront do not say, hey, I don't want to invest. This won't work with me. We are in a habit or a culture of not saying no. But then we say, hey, you do this, and come back to me. Do you mean it when you say this? Or it's just like in hiring and recruitment, they say, I'll get back to you. So the honest answer.
So to be very honest, we are very early stage fund. We never ask startups to do certain things, then we invest. We will invest. Definitely we give feedback that why we are not investing because of X, Y, Z reason. But we can't, we never given hope कि आप दोबारा आओगे. तो हमें ही नहीं पता होता हमारे पास उस टाइम पर पैसा होगा या नहीं होगा, क्या situations होगी, whether we have invested in their competition or not. But definitely if someone is giving metrics, I know many funds, they mean it really. If they are saying that, okay, these are the 5 metrics which are not correct, if you will correct it, I will be happy to reevaluate. They really mean it. Definitely it is subject to their investment committee and other things, because being a fund manager, you will not believe we have lots of processes where even if I am liking some startup, it is not like that I can invest my investors' money. I will have to showcase to other partners, then investment committee, then some of the LPs, I will have to take the next opinion. But I don't think, and because we are not legally bound कि हम बोले कि नहीं आप ये करो, because that's the thing. If someone is giving metrics, I am 100% sure he has meaning. If someone has different opinion.
I think you should rather look at it as the assignment given by the teacher to you, and they want to see your performance. Okay, any other question?
Just one question.
Yeah.
Back, yeah. when evaluating to invest or not, what would be the ideal balance that you recommend for fund deployment in a Series A versus a seed investment? So when you're looking at investing in a startup, the ask could be, what do they ask for? But is there a specific deployment of fund into marketing, offline, online, into sales teams, senior, into management roles, or into NPD? What's the kind of ideal split on fund deployment within a startup?
So it depends upon case to case basis. It's not like that if I will say, okay, if you will come to me and you will say, okay, I will spend 80% in the marketing and 20% in the inventory, then I will invest in your company. So there is no perceptions from the investor perspective. It is like a interview kind of thing where we keep exploring whether the fund requirement is good enough to reach the next stage or not. Sometimes what founders do, they do not estimate the right kind of requirement under different category. You gave a very right example. Sometimes startups came and say, okay, I will spend in marketing and inventory, but they don't give enough budget for the senior leadership hiring, because that is also important. Once you will grow, you can't do everything yourself. You will require some senior people. So with our experience, we try to sit with them and to understand whether the right kind of budgeting is there. But from our perspective, it is not like that, that in case you have a specific allocation to a particular category, we will take that.
So just to add to what Amit said, there's a factor of two things, right? One is what or where the company is today and what all it has done. So you could have had a great line of products, but you might not have had the right team to sort of get it to the market, right? So then, which means you have to bolster your human capital rather than your product, or it can be the other way around. You have the great set of people, but maybe you don't have the, you have one hero product, maybe you want to launch another one, and then which means you have to spend more on marketing and NPD. So totally depends on that factor, and then where you want to be until the next price, right? So let's say you want to look at the company as, let's say, a couple of hero products, but very large in scale, then the deployment plan will differ accordingly. But you want to push that to a different, target out in the future, then your deployment plan will change. So it's a factor of where you are today and what you want to be, let's say, until the next fundraise happens.